Hi team, Tom here from Investing with Tom, and I've just recently come back from the airport after having a cancelled flight. So excuse the pun, but it's been a bit of a turbulent day. So I thought while I sit in a hotel room down here in Christchurch in New Zealand, it would be a pretty good time to talk about a guy that the sort of father of value investing, Ben Graham, calls Mr. Market. So, if you're not aware, Mr. Market is a guy that, or a character at least, that Ben Graham, who is Warren Buffett's, essentially he was Warren Buffett's teacher. He taught Buffett a lot of things that he knows and really got him started in investing. Warren Buffett actually worked for Ben Graham as an analyst for a long time for his own investment firm. And a way that Ben Graham likes to describe the emotions of the stock market to his students was by introducing a character by the name of Mr. Market. So, Mr. Market, he is quite an emotional guy. He's a businessman that will buy anything from you and sell anything to you at essentially any time. So the way that Mr. Market works is essentially he comes to you every day and he offers you a whole bunch of companies, a whole bunch of stocks for a certain price every single day. Most of the time he's pretty rational. He offers you companies at pretty fair prices, and he also offers to buy companies from you at pretty fair prices as well. But he definitely is a little bit bipolar at times and goes through phases where he's very exuberant, very positive about the companies he's got, and he'll be willing to buy things from you at a very high price, but he'll also want to sell you things at a very high price. And sometimes Mr. Market also gets quite sad and depressed, and he'll be willing to buy things from you at a very low price, and he'll be willing to sell what he's got to offer to you at a very low price. As an investor, our job essentially is to take advantage of Mr. Market. First off, Mr. Market is a way of, allowing you to better get your head around how to invest intelligently, and how to avoid using emotions when you invest. So if someone's coming to you and they're quoting you prices every single day, you're not going to go ahead and sell what you own to that person just because their quoted price is going down. A lot of people fall into that trap in the stock market, and rather than the classic, buy low and sell high, they'll actually buy high and sell low because they'll get caught up in the emotions of Mr. Market. Mr. Market will be coming to them every day and quoting higher and higher and higher and higher prices, and people will start thinking, if I don't buy now, the price is going to go through the moon. Through the roof. The price is going to go through the roof, and I'm going to miss out. That's as much as we like to think we're not emotional when it comes to these financial decisions. It definitely does play a role. And using this Mr. Market character as a way for you to kind of steer clear of that. So if the prices are going high, as a value investor, we want to stick to our guns. We want to know what we think a business is worth, and we only want to pay or we only want to buy that business when Mr. Market is depressed and when he's quoting us lower and lower prices. So the other thing you don't want to do is sell when those prices that you're getting quoted are going down. If you own a house and your neighbor is yelling prices over the fence to you every day, you're not going to sell your house to him just because he starts telling you lower and lower prices every day. And just because he keeps telling you higher and higher prices, you're not going to say, well, actually, let me go and buy your house from you as well because I want to. That's just not the way it works. You wouldn't do that in any other investment, so don't do that in the stock market. And that's essentially what Mr. Market's all about. He's an emotional character. We've got the advantage of him coming to us all the time, so we can use him to our benefit, and we can kind of take advantage of his emotions. So that's a quick introduction to Mr. Market. I hope you enjoyed the video. Um, I am just getting started out here on YouTube, so if you did enjoy it, drop it a like or drop it a thumbs up. Leave a comment, love to hear your thoughts on it. Have you heard of Mr. Market before, and kind of how have you avoided using your emotions when it comes to financial decisions? So I guess the other thing I'll just quickly touch on in regards to Mr. Market is kind of what some of the people or some of the investors are doing that I follow. What are they doing at the moment in the current climate? So as I'm recording this, I think it is the 3rd of November today, 3rd November 2018. And a lot of the investors that I follow are kind of camped out at the moment. So Phil Town from Rule One Investing is a good example of that. Currently, he's very heavy cash. He's not buying much of anything at all, as far as I'm aware. And he's doing that because Mr. Market is very exuberant. Phil's able to sell to Mr. Market at fantastic high prices. He's selling out of the likes of Chipotle Mexican Grill, I believe, at the moment. And we're starting to see Mr. Market get a little bit turbulent. So over in the States, we've seen some significant drops in the market, and we've seen some significant sort of short-term recoveries as well. So there's a lot of people sitting in cash. I think Warren Buffett's got somewhere in the ballpark of $150 billion of cash. I may be slightly out there, but some ridiculous amount of cash anyway. He's struggling to find places to put money at a good value. So really the key is to just be patient and don't let these all-time highs kind of pull you into making unwise investment choices. Wait for Mr. Market to become depressed and then take advantage of those situations. So that's my 2 cents, and that's an introduction to Ben Graham's Mr. Market, and I hope you enjoyed the video. Cheers.